Hello guys, good morning. Today is Saturday, October 1st. I'm going to be talking about the week from September 26th all the way up to Friday 13th, right? Well, not 13th, 30th, Friday 30th of September. I'm going to do something a little bit new, or, well, yeah, new, I think it will be the way to call it, where I've taken screenshots of the higher time frame, the lower time frame perspective, and the results of each trade that happened throughout the entire week, what happened on each day and everything, without really making much of a resume, but while just looking at the week's trades, right? And the reason why I did this is to really not lose that much time throughout the video, right? To not make it as large as it could be, and to do my best to do just that, right? Reduce a little bit of the time that it takes to record, and then of course edit this. So yeah, that's what it is. We will have to analyze Thursday on a little bit of a more thorough manner, due to the fact that I theoretically took no trades, but I do remember there was theoretically a buy, right? But I couldn't take advantage of it because I was outside of home, but when I saw it, I didn't really like it, but we'll see. We'll begin with Monday, where I took one win and one loss, as you can see, and the higher time frame perspective on the win is this one, where, as you can see, this is near kill zone. We're going to look only at near kill zone because, in my opinion, that's really all that we need, but we will analyze later on the charts the higher time frames on each day and why we could have expected this or that, right? So, as you can see, the 830 opens here. We have phase one basically begins going a bit lower, then aggressively higher with fair value gaps, market shift after taking it low, starts going aggressively higher. Respects here something to the left. I do remember showing something else. Well, yeah, this, but I actually showed it only on the loss for some reason, but we'll discuss that later. So the higher time frame perspective on the win is this, right? We have the open, trace higher, we have a 5-minute fair value gap, 50-minute or 1 hour order block, if I remember correctly, price starts going lower. We do have a fair value gap in here that we'll talk about in a second. Goes lower, goes aggressively higher, as you can see, takes buy side liquidity from this high specifically. Then we do have this other reaction here and this tiny bit of a week where price basically just respected that level a little bit more. Takes that, and then you can see the aggression lower with a clear fair value gap up here and a tiny fair value gap in there that we could have also used, but didn't really make that much sense. Also, if we pull the Fibonacci, we can see that the 50% somewhere around here, so theoretically we should be looking for this only. So as the higher time frame perspective, what can we see in the higher time frame perspective in this case? We can see that price went higher to take buy side liquidity, then went aggressively lower, causing a market shift and displacement, creating that 5-minute fair value gap that we're looking for throughout the session. And then you see price retracing back into it, and that's when we jump onto the lower time frame perspective on the win, which is this. Price trace into this 5-minute fair value gap, right? We have the first mitigation, as you can see, doesn't create a market shift, doesn't cause a fair value gap, so there's no way for us to take advantage of that entry. Goes aggressively higher, fills in all of this fair value gap in here, mitigates order blocks in the 5, 15, and even the 1 minute. This candle is also an order block, which is mitigated right there. Shows a little bit of an aggression. Retracement, you can see that there's a low, a high, a lower low. That will be a change in the market shift. So a change in the market, so market shift basically. This is the market shift for me. And as you can see here, the fair value gap is drawn like this because through the session, it looked something like that. But after the market, the FXCM option on TradingView tends to change the wicks and bodies. But as an example, if you go to Monday's video where I did the analysis and everything, you can see clearly how the fair value gap was created. So the fair value gap is there. And I just want to clarify that because it looks like I'm saying that there's a fair value gap when there is, obviously, right? There is a fair value gap between this low and this high. You can see the difference clearly, but it is very tiny, which maybe we would have avoided completely. This was the execution. Stop loss, I can't really say for sure if it was above this high, which in my opinion it could have been, but probably all the way up here in targeting. As you will see, the results will be all the way down to this low, which is the low created through phase one, right? This is the first time that I took partials. This is the second time where I took partials below this low, right? Because as an example, we could have seen price retracing a bit, maybe to mitigate something here, maybe to go even higher, mitigating this, or mitigating this order block, this fair value gap, multiple things that price could have gone higher too. before continuing with the trend. And I was really not interested in taking a break even without really taking profits after such a good move in our favor. This was around 5-6 hour that I was able to take, but with partials and everything, I ended up with just a 4% profit, which minus the loss that we'll see now, that's an overall 3% for Monday, right? Should have written this as well. So plus 3% on Monday. So let's see the higher time frame perspective on the loss. It's exactly the same. We're talking about this fair value gap. So you can see market shift, just this market shift is exactly as the one that we saw in the 1 minute, right? This is the way that I marked up that market shift. And as you can see, it is in a very clear price action compared to this. We have the clear run on buy side liquidity above this high, the clear fair value gap, and the aggression on the market shift. Here, this is a bit more complicated, but overall, it is a market shift after run on buy side liquidity, which the buy side liquidity is somewhat far, while of course mitigating this tiny bit of a fair value gap in here. And also, if I remember correctly, again, 1 hour or 15 5-minute order blocks that we have back here. Now, jumping into the lower time frame perspective on the loss, we have two opportunities on which I took this is the loss that I took. As you can see, we have a tiny round of buy side liquidity, aggression lower, market shift. This is, in my opinion, a really good area, right? A really good trade. I didn't want to take this one because I didn't really like the fact that we were pretty low into the move, right? I kind of wanted to see it going a little bit higher because I didn't like the higher time frame perspective. I didn't like anything about this entire price action. When I saw price going above this high and then ranging and then aggressively going lower, I was pretty sure of it. This is something that I took on my challenge and funded accounts. And as you can see, it was trigger in and out basically in 2 minutes, right? So in my opinion, a really good trade. We do have the 5 steps. And the only thing that we can say about this one is miss the price action. The 5-minute fair value gap is a little bit unclear, pretty low into the move, but with very nice lower time frame entry. In my opinion, both of these were really nice entries. But as I wasn't very convinced about higher time frame, I just wanted to see as an example, if this entry would have created another fair value gap, right, I would have tried to enter on that one. That would have been fine for me. But I didn't. Created this, run buy side, market shift, major market shift, right? Because this break already is a market shift in my opinion. And then comes back up, mitigates it, and as you can see, it completely fails. Target would have been exactly the same that we discussed in here, right? Probably with a worse risk to reward ratio in that case. Now, Monday, this is the price action, as you can see. So let's see why we could have expected various price action. And we have multiple reasons for that. Let me mark up the near kill zone, which is this. Actually, we could use this sessions thingy. Yeah, sure. So London went aggressively higher. We are still respecting this, which as you can see has a run of buy side liquidity, aggression lower, buy side liquidity on this. Takes that, mitigates 1 hour order block. If I remember correctly, we also have 15-minute order blocks. We have this entire thing just being respected, right? On this, you can see the aggression. We can see a 5-minute for a 15-minute fair value gap, as you can see there. Press trace back into it, and this is around the loss, and the win was somewhere around there, executed around there. This was the first partial, around here, the second partial, and then the take profit, right? That's the price action. That's why we could have expected a very price action. If we want something a little bit more explain more in depth, you can go back to the day's analysis where I did it much more in depth, right? So moving on to Tuesday, let's see how that went, which is, if I remember correctly, 1 win and 1 loss with a 3 or 2% profit because I closed this one earlier for a personal target, as I do mention. I mentioned it on the screenshot, my bad. Okay, so higher time frame perspective on the win. Let's go for that. Near kill zone, same exact thing. Phase 1 goes higher, takes buy side liquidity, theoretically looking for lower prices due to yesterday's move, right? Monday's move. As you can see, run the buy side, there's no market shift, no fair value gap. Then the market shift happens here. No fair value gap. This is the better market shift basically, or maybe even this one because they both happen at the same time. This is where the loss happened, which we'll look at later. Price goes aggressively higher. What did it do there? It took buy side liquidity, respecting the order flow of this. Price came back up to an order block, right? Still respecting this lower low, lower high scenario after taking buy side liquidity. As you can see, again, random stops, aggression lower, market shift, fair value gap, and this is where the lower time frame perspective comes in play. As you can see, price goes aggressively higher, take some tiny buy sell liquidity on the lower time frames, market shift on that low, or maybe you want to go for this one. Either way, the entry would have been exactly the same, going for this fair value gap, and in the meantime using this as buy sell liquidity if we were expecting this to be mitigated again, right? Would have been a little bit of a riskier entry because the fair value gap was already mitigated, so if it came back up to it, might not be a good sign, right, overall. But in my opinion, doesn't really have to be like that, right? As an example, this one was mitigated twice, maybe 3 times because of this coming back up to that, but overall worked out just fine, right? So again, lower time frames, what are we expecting for price to do? Mitigate the area, cause a market shift while creating a fair value gap, right? Again, we're looking for a fair value gap to be created on the move that causes the market shift, right? Built before the market shift, basically. And the fair value gap is created here. Price comes back up, mitigates me in right there, stop loss up here. And that is pretty much it. We do have another better entry, in my opinion, down here, as it is much more structure being broken. And as you can see, mitigates it by the tick, continues going lower. The result on the win was this. I'm looking for this low to be taken. This was a 3.5 or something like that, and 3R, this was close here to achieve a personal target. Otherwise would have tried to go in lower, but taking a very big partial below this low, right? So as an example, when this low was to be broken, I probably would have taken around 50% and moved my stop loss to break even. So here, as an example, I could have taken a 1.5% win, and then price would have taken me out on break even, to then price just continue going lower. Right, the major target, as we'll see, well, let's check it out now so you understand what I was targeting. My entry is right in here, right? Yeah, around here. Goes aggressively lower, takes a low. No, that might not be the one. It has to be the one though, isn't it? Have it at 10 or 11. No, 11. Yeah, it says 11. Okay, cool. Let me check it out. Let's actually change the sessions up to 11, because that's what I'm using currently, and I'll explain that later. This is my entry. Well, it is what it was, right? It takes a low, goes aggressively higher, would have taken me out on break even, and then continues going lower, which this was one of the largest target that I would have gone for, and otherwise all the way down to this low, which is the low created through Sunday. But that was a very aggressive target that I would have not gone for, right? So yeah, we're talking about 5 or 6 are around that level, which would have been the ideal target, and on the much lower target was around 8 or 9R. Right, with this entry that I'm showing here, you're going to go to charts if you want to check that out. So the higher time frame perspective on the loss was, as we mentioned, the exact same price action that we just saw, the exact same analysis, but I was interested in this fair value gap. As you can see, this fair value gap is created inside the area. Well, actually, it's not created. It starts inside of the area where we are supposed to be looking for fair value gaps, right? But part of it isn't in there, right? But price does mitigate this, does come back down into this from this low to this high, right? The move that actually breaks or causes the market shift. So I was interested on it, and if I saw a lower time frame opportunity on it, which in my opinion I did see a really good one, this is pretty much what I took, right? So as you can see, price comes back up into that. We have a tiny bit of buy sell liquidity above this high, mitigates the level, goes aggressively lower, creates a tiny bit of a creates a high, a low, lower high, lower low. So there's a market shift. That's a fair value gap in here. Price, I wanted to execute it on this one. I do have the live execution on this one, or I don't really remember what I did with this one, but I do think I did record it, but I don't think I uploaded it. Okay, it doesn't really matter. The thing is that I wanted to execute on this, but that one wasn't that interesting due to the fact that I couldn't get 4R before the low that we were targeting before here, this low. Because we're pretty low clearly, and what I decided to do was just use this tiny bit of a mitigation as buy sell liquidity. So I placed my entry right above the high, stop loss above this high, and what's that? Yeah, and just hope for the best, right? It was a good risk reward ratio. It was a good entry in my opinion. Took it and well, completely failed. And as you see, I do think the other loss that I took, yeah, just for this loss actually, so Monday's loss was exactly the same as this one. Right, so as you can see here right now, I could be taking a little bit of a conclusion that unless price actually retraces good enough to a good to a good premium and discount based fair value gap on the 5 minute, this is a loss that maybe happens very often because I've taken losses like this maybe 3 or 4 times in the past 2 to 3 weeks that I could have just avoided, right? Both Monday and Tuesday, it would have been really easy to avoid losses by just waiting for a clear fair value gap in a better area of premium and discount, right? Because if we go up to this, we're talking Tuesday. This is say, yeah, the fair value gap, the first one, as you'll see, is not on the 50%. Right, this is the 50%, and price doesn't even get up to that, right? As you can clearly see right there, right? So I could have waited for price to just get to the good one, to the one that is actually at a good risk reward ratio, but again, would have been difficult as it is a fair value gap within somewhat of a good premium discount. And it's a bit complicated, but I've seen this loss many times already, so maybe a rule should be created for that one. So a really good day, still made it out in profits, took a 5% profit already with Monday and Tuesday, and that's when I decided to stop trading with Challenge and Funded for this week. Basically because I finished on the monthly objective that I had for September. And that's good enough for me. I don't want to trade anymore because, as an example, what could have happened, what we will discuss now, which is Wednesday, I would have taken a loss, a pretty stupid one as well, as you'll see. And this would have been a little bit of a low punch because I made a target which theoretically should allow me to get out of the week already, right? Not trade, not risk more capital. And then I went anyways and took a loss that doesn't really make that much sense, right? And that's not good to have those little psychological issues in the middle while you're trading, right? So I really like that I was not part of this, but I didn't really like even taking this trade and thinking that I should have taken it on Challenge or Funded, right? So I'm pretty happy that I was able to leave by Tuesday, and that I didn't go through this one, but this would have been a loss that I would have taken if I would have continued to trade on my Funded and Challenge, and it would have not been fun, right? So let's analyze Wednesday. Wednesday was one loss, as you can see, and as I mentioned here, context would help a lot on this day by understanding the major ones on sell side liquidity. Right, so higher perspective on the loss, higher time for perspective on the loss is that this is the New York kill zone up to 10, as you can see. Price starts going higher slowly, little bit of an aggression, takes a high. This is the session open. So session opens, goes aggressively higher, it takes buy sell liquidity. This is the open, so we have market protraction concept, power of 3 concept in here, so we have some good confluences to believe it could be lower. Plus, price has been going lower for the past few days. So, and of course, the major time frame trend shows that price theoretically should continue to go lower, or could continue to go lower. So we have many things in favor, right? And we have the 5 steps, run stops, 5-minute market shift with fair value gap, and now we want the lower time frames to give us a opportunity on that. And as you'll see, in my opinion, we did get a somewhat good opportunity. This is the mitigation, nothing here, aggression higher, lower low, lower high, lower low, low, high, lower low, right? So this is a market shift. There's a fair value gap. It is in the area where we are supposed to be looking for fair value gaps, so it's fine. This is the execution, even takes a little bit of buy sell liquidity with this 3 weeks that we have here. Starts going aggressively lower, comes back up, takes buy sell liquidity. In my opinion, this was fine. When I was seeing this, I was thinking this is a lot of sell side liquidity being built up, right? And each reaction shows more and more sell side liquidity being created, right? That was what I was not hoping, but trusting on. And I don't remember, I think my stop loss was all the way up to this high. I don't think I would have risked it to this. And just targeting probably the low that we can see there. Or, yeah, the equal highs that we have here, which we do have equal lows, sorry, not equal highs. So that's the execution. In my opinion, we have everything that we look for, but the reason why this failed is this. We have this major low back here, which was created with the impulse through Sunday. Price took that through midnight in London, basically, London kill zone. And after that, you see a little bit of a range. Aggression higher, takes buy side, aggression lower, takes sell side, goes aggressively higher. Fair value gaps in the 15, if I remember correctly. Also in the 5-minute, you can see a tiny bit one there. probably an order block in the 15 as well. Comes back down, respects that, goes aggressively higher, market shift, slowly going lower, mitigates 50-minute fair value gap, 50-minute order block, continues higher, little bit of a range, higher, retracement, higher, and so on and so forth, right? So I did have something like this happen to me somewhat recently, where we had major runs on sell side liquidity. So price definitely had a reason to actually go higher. I had a reason to go higher, but I still was pretty convinced that the weekly bias was bearish due to the price action that we had on that day, to the price action that we had on previous days of the same week. And I went for that and ended up taking a loss or 2 losses while missing out on pretty good buying opportunities on that day. So it is what it is. Not sure if buy opportunities showed up. In my opinion, based on today's analysis, no, there were opportunities to buy in interesting areas, but some were really high up. Outside premium discount metrics disabling me from trading them. Let's look at that, because I don't really remember much of Wednesday. But we have the major runs on sell side liquidity, so we understand that. We have retracement, goes higher, retracement higher. So the reason why I said we could have had opportunities is this run on sell side liquidity right here, right? We have the bottom, take sell side liquidity, a little bit of a range, aggression higher. We have a fair value gap in here. What is my issue with this fair value gap? Let's say an example. The market shift is with this high, right? So the fair value gap should show up between this high and this low, right? On the move that basically causes the break on the market shift. Does it show up in there? Yes, it is not created before the market shift, which is fine usually. And price does come back down to this. So do we have a fair value gap in the 5 or 15 minute inside a good premium and discount? We definitely do. This is even at a very discount price. I don't know what it mitigates. 705, right? So it even goes further than 602. Maybe, I don't remember if it did or not. But no, we don't have a 15-minute order block, as I thought we might have. And so it's something, right? Now, we do have to keep in mind, it's not very clear price action, and this right here is 10 a.m., right? So the mitigation happens exactly at 10 a.m., goes aggressively lower, no fair value gap to buy from here, tiny bit of a range, aggression higher, no market shift, aggression lower, aggression higher, right? Market shift. Is there a fair value gap in here for us to actually trade? So we have this, and in the day's analysis, I did mention this one. Have this fair value gap. Now, the thing is that this fair value gap is mitigated completely before the market shift occurs. So can we really reuse this? In my opinion, no. And if I would have traded this, it would have been with my stop loss below this low, which would have been taken either way. Now, after that, do we have a fair value gap to buy? We have run on sell side. Right, we're at this point, we're just waiting for a fair value gap to show up for us to trade. We have a market shift above this high, and this is a very tiny fair value gap right there. This is the buy that we could have taken at this date, which, in my opinion, is not something I would have traded. What are we targeting? I mean, just above this high, we're getting 8R. Just for you to imagine, we have a really good risk-reward ratio on that one. And if we wanted to be, well, actually, we can't be more aggressive than that. I mean, where does it peak? Let's look at where does it peak. This doesn't really make that much sense, but I do like doing this sometimes. It peaks on Friday at 53 up. Talking about a 50% profit. What? So here's the thing about this buy. Here's the thing about this buy. I think the video is going to be larger than expected. It's in good premium and discount. Happens after the hours that we're theoretically supposed to be trading, which is not the end of the world, but it's not ideal either. Thing is that if we compare it to, as an example, Tuesday's trade, it's pretty simple. Tuesday's trade was really clear. Monday's trade was really clear as well. Right, you can see the run stops, the fair value gap happens where it's supposed to happen, the lower time for opportunity just shows up and works out. So I think it's an opportunity that we could have taken. I'm pretty confident to say that I would have not taken this in any way for multiple reasons. The fair value gap is not something that convinced me in the moment. The lower time frame opportunity happens in a very small fair value gap, and that's something that I didn't really like, and I just would have not taken it. Should have I taken it? Maybe. It's a fine fair value gap at a good risk to reward ratio. At a good premium and discount, right? Discount price in this case. And the lower time frame would have been another issue, right? If I'm already having doubts with the higher time frame, the lower time frames didn't help for that. Didn't help with that, right? So it is what it is. Now Thursday, let's analyze Thursday, because the reason why I say that I'm not sure if we had trades or not is because we did have some stuff to actually use, which was, okay, let's go to 15. No, I'm going to say already we didn't have trace. Thing is that I look for the 5 steps or the 2 steps, the first 2 steps to happen together. So the run and stops and the market shift with the fair value gaps have to occur in the same time frame. So if we're looking at a 15-minute fair value gap, which gives us the entry, look at where the fair value gap is. The fair value gap is in an area where it's supposed to happen. Right, so I'm fine with that. This is a good fair value gap. I'm going to look for lower time frame opportunities on this one. But what's the thing? Theoretically, we need a run and stops first before the market shift and the creation of the fair value gap. Are we in favor of the trend? At this point, we already know that we're bullish. We already have a very high probability of prices going higher through the entire rest of the week. So I'm pretty convinced about the bias. I was bullish on this day. I was bullish on Thursday and Friday without any kind of doubts. Right? Could we try to sell in a couple of occasions? Definitely. Did we really have any clear opportunities to sell it through Thursday and Friday? No. Right? So let's talk about the bias on Thursday. Could have we taken this? Yes. Now, here's the thing. The sell side liquidity is this low. This is the only sell side liquidity that we have visible on the 5-minute, on the 15-minute, sorry. Could have we used the fact that this couple of weeks here are a bit higher than this low, and price does take that? We could. But I want to see a clear run and sell side liquidity. I want to see something like this couple of lows being taken, something like this low being taken, something like this low being taken. Right? In my opinion, nothing close to that is taken. So for me to look for interest in this 15-minute fair value gap doesn't make sense. Right? If the fair value gap is visible from the 15 and the 15, if the run and stops is visible from the 15 and the 15 gives me a fair value gap in a good margin, of course, so again, it has to happen with the market shift and the fair value gap, then I'm happy with it. I'm taking that. But we didn't get that today. Right? So for me, I'm going to say already, no, we didn't have any kind of opportunities. We could have not taken any kind of opportunities. And again, in my opinion, I did a really good analysis today, because this, in the 5-minute, you can see that there are clearly equal lows in that. The price respects, takes, and goes aggressively higher. This is definitely something that I'm taking advantage of. There's a fair value gap in here, along with the market shift, right? I'm definitely looking for interest in that. Did price trade back into this? It didn't, right? It didn't. And when it's here, it's too high up. And when it comes back down into this is already mitigated. And I wouldn't really look for another mitigation. I just like for the fair value gap to be mitigated once, to do its thing, and to never come back to it, right? So I would have not looked for this even if I thought it was a good idea, right? Now in the 15-minute fair value gap, we do get an entry, right? We do get an entry. Talked about it on the day resume. And again, this lower time frame entry was also somewhat complicated, because ideally we see price mitigating the area, causing a market shift, creating a fair value gap, and immediately we're triggered in. In this case, mitigates the area, goes higher aggressively, right? Doesn't create a fair value gap, comes back down, takes some sell side liquidity, still respects it as low, little bit of a market shift above this high, fair value gap, and this should have ended the entry. So already having a lot of doubts about this 15-minute fair value gap, and the lower time frames didn't help at all. Do we get the entry? We definitely do, but it is much more complicated than what we've seen on Monday and Tuesday. And I'm using Monday and Tuesday, and you'll see on Friday as well. We get clear opportunities with everything happening as we want to see it. So I'm just looking for those. I don't mind missing out on this opportunity. Would if I wanted to be into this opportunity, knowing that it worked out? Of course. But if my plan tells me that I'm supposed to trade in a way that I know has worked out for the past few months, or maybe even for the entire time that this market has existed, I can't really say for sure that one. Why would I try to force something else that I'm not entirely sure if it works? So I'm gonna stay with my plan. If you want to try something else, you can try something else. And what I'm trying to say here is that I don't care that I missed out on this opportunity, even though it worked out, right? It just doesn't make sense in my plan, and it is what it is. So Thursday, no trades, fine with that, and that is pretty much it. Let's go to Friday, where we had an interesting day as well, and you'll see the reason why, which we're gonna actually did have. So runner stops, fair value gap in 15, along with the market shift, which would have been above this high in my opinion, or just above that high. I'm not counting the weeks on the news. I don't really care about those. But even on the 50-minute, we can see what we get on Friday. Let's go to Friday, right? One loss, one win. I do think that the loss, well, actually I didn't do the analysis on the loss on this one. Okay, so here's the thing. On this day, I might have taken a loss, but I'm not entirely sure about it, right? On Challenge funded trading, because just like I mentioned that multiple losses happen at a pretty high or pretty low fair value gap, in this case, we do get another thing that tends to repeat itself, and I'm interested in creating a rule for it, but at the same time, it doesn't really seem necessary, but we'll talk about it now. Friday, one win, one loss. Higher time frame perspective on the win is this. Session opens on this candle. We have aggressive news, as you can see, aggressive candle. We have run and sell side once again. Price starts going higher. What do we get here? Market shift. What is it? Right there, fair value gap. We do have another fair value gap. This low to this high to this low, I think. Doesn't really matter what's mitigated, and it was a pretty low fair value gap as well. The lower time frame perspective on it, what is that we get? This is the first one. This is the loss, right? That's probably why on both trades. Yeah, okay, makes sense. Let's talk about the win first. We have a lot of sell-side liquidity being created on this tiny bit of a range and on the first mitigation of the fair value gap, and then this other tiny bit of a range takes the sell-side liquidity, goes aggressively higher, fair value gap, execution, and we'll talk about that now. So this is why I say that the way that I trade shows up, usually shows up, I'm not saying every single day, but at least once or twice a week, and it happens exactly like this. If I pull up the nodes, if I can find it, one run and stops, 5 minute displacement on market shift. Do we have the run and stops? Do we have the 5 minute market shift and displacement all in the same chart? We do. Cool. Do we have the fair value gap then to trade from? Yeah. Okay. So what's next? Let's actually change this because it's triggering me. Price trace into fair value gap. That's it. Higher time frame fair value gap. Lower time frame displaces. So price trace back into the higher time frame fair value gap. We have the first mitigation there. Let's ignore that for now. Counts back down, mitigates it. Okay, cool. Now we go down into a lower time frame. Right, let's go down into a lower time frame and see what happens. This is the lower time frame. What are we looking for now? Now price has traded into the higher time frame fair value gap. Now we need the lower time frame to displace and cause a market shift. When I say displace, let's say lower time frame creates fair value gap and causes a market shift. Right? Do we have that here? We have aggression higher, market shift, creates a fair value gap. What do we do now? Executing the lower time frame fair value gap. It's exactly what happened on Friday. It's exactly what happened on Monday. It's exactly what happened on Tuesday. It's, in my opinion, right? Maybe you have a different point of view for it. In my opinion, it's exactly not what happened through Thursday, right? Or not what happened. Well, actually, Wednesday did have this as well, right? It's just a badly lost. That's why it counted, right? So that's why this is a really good trade. What extra do we have? The aggression, the clear displacement, and the sell side liquidity. Multiple times price comes back down around this area, mitigating it over and over, creating nothing but sell side liquidity. And in the meantime, as you were able to see in the higher time frame perspective, the buy side liquidity is just being respected. This high is barely taken, right? And this weak is still buy side liquidity, in my opinion, right? So that's something that price could easily just take or use as reasons to go higher, which is this what I targeted? I can actually see it. No, I went for higher. Yeah, we need a better risk to reward ratio. This is the perspective on the win, just looking for higher prices, right? Theoretically, if we go to Wednesday's chart, theoretically, if the trade, sorry, Friday's chart, if the trend is as strong as we think it is, it should create a higher high. Am I going to go as high as that? I'm not. I'm definitely not. So what are we going to do? As an example, if I have the opportunity to go up to maybe 20R all the way up here, I'm going to be happy with 5, 6, 7R. If I see something in the middle that gives me 5R and it makes sense for a price to maybe cause somewhat of a retracement after taking that something, I'm going to aim for that, because I'm not interested in just missing out on huge profits by looking for 20R trade. Is it possible? Can I hold that trade? I definitely could, right? Psychologically, I don't think I could, honestly, right? I could based on my strategy, that's what I'm trying to say. But psychologically, I don't think I could, unless, again, I closed 80% of it at around 5, 6R. So 5 or 6%. So coming back to this is a really good trade. Everything that we look for happens as we look at. Oh, and something else, because maybe you cannot see that, but side this already. This is our, it's all the way around. Where is it? 50%. Again, I don't think that you can see it. 0.5. Fair value gap is 0.5. Goes further than 0.5. Fine with that. Good risk reward, sorry, good premium and discount inside the area where we're supposed to look for the move, right? If this is the move that breaks the market shift, this entire leg is where we are supposed to be looking for the fair value gap. For the fair value gap in 5, or will, as ICT teaches, 1, 2, 3, or 4 minutes, right? This is where the fair value gap after the run and stop, actually, sorry. ICT teaches as an example, if this is the run and stops, down here is where, after the run stops is when we're supposed to be looking for the 1, the 2, the 3, and the 4 minute to cause a market shift, create a fair value gap, and trade from that. That's not the way that I trade, as I've mentioned a couple of times already. I don't really like that type of execution. It doesn't work for me, because as an example, I get confused a lot with which high to choose, which low to choose. So when I do it like this, I just wait for a higher time frame confluence to then the lower time frame confluence. Have I missed out in opportunities because I wait for that? I have. Really good opportunities. I've mentioned them through videos. I show the executions in the paper trading sometimes, not always, sometimes. And I have, and I'm honestly, I'm not really mad about that. I'm not sad about that. I'm fine with it. This is the way that I've learned to trade with ICT's concepts, and I'm really happy with it, honestly. And as you can see, it does give me some really good results on a weekly basis, and I'm happy with it as well. And as you can see, we're talking about, let's talk about the loss, actually. As we have here. So this is something that I've seen repeat itself multiple times, where a higher time frame fair value gap that has every confluence that we look for is mitigated barely, causes a reaction, gives us a lower time frame entry, and it fails. It fails because it's later used as sell side liquidity, sell side or buy side liquidity, depending, of course. And I've taken this loss probably 2 or 3 times, just as the one that we discussed a little bit earlier. I think it was on Wednesday. No, on Mondays and Tuesdays trades were the ones that I was talking about. Yeah. So this one is an example. I am not entirely sure if I would have taken it on challenge or funded, so that's why I ended up counting it as a loss, right? So theoretically, on this day, we would have ended around a 3%. The reason why I say that is because I took a loss and I'm going for another trade in the same area. So I'm very likely just going to look for 4R, which is the bare minimum that I have, the bare minimum that I do, right? Because I wouldn't go for 5R, which is a really good risk reward ratio. But the problem with 5R is that we could be left behind. We could be short for it, right? Price could stop a bit lower and make us miss out on really good profits. And already at 2R, I'm already 1% higher than I was at the beginning of the day, and I'm happy with that. At the week, theoretically, I'm already 5% up. Sorry, 4% up, because theoretically I would have taken that Wednesday's loss. So I'm 4% up. So if I can close the day with a 1% already, that's a 5% on the week that I'm happy with. Ideally, I'm aiming at a 20% month, so a 5% weekly. That means that I literally just need one trade, one 5R on the week. right? So if I wanted to get that 1%, I'm closing a 2 point something hour to cover the loss and the commissions. If I want to be a little bit more aggressive and say, let's go for the big one, let's go for the 5R, I'm getting 4% out of the day. But very likely, again, just going for the 4R, which is the bare minimum that I do, covering the loss and ending the day on a 3% profit. That's why I call it a 3% Friday and a 7% week, because again, theoretically, Wednesday's loss plus 5% on Monday and Tuesday, that's 4% plus 3% on Friday, 7%, right? Ideally, I would have not taken the Tuesday loss. The Tuesday loss, which was pretty low, but I did. And the Monday loss is the one that I really didn't like. The Monday loss is something that I don't really think made that much sense, honestly. Where's Monday? Oh, Monday's all the way there. The Monday loss is something that I didn't really like because it didn't make sense at all. It was a very ugly area. Buy side liquidity was pretty far to the left. So you can see pretty far to the left and pretty low, right? So it didn't really make that much sense. This is what I find more like a run on buy side and then an area to look for sells. Because the run on buy side should be run, aggression lower. Reason why I was interested in this run right before the open, because this could have been something like this, for value gap entry, continue lower. That would have been lovely, right? That's it. I think that's it. I think that's all that I wanted to talk about. It was a really good week for me. I'm really happy on the way that I'm trading lately, and that makes me happy about being happy about trading, of course. And I think that's it. I think that's it for today. I hope you enjoyed this little bit of a video. Actually, let's talk about something else that I want you to look at, because I saw it on an ICT video, ICT old video, I think it was on the Market Maker series or something like that, about looking into which days of the week actually create the low or high of the week and in which session. And something that I found out and also heard on one of ICT's video is that Tuesday or Wednesdays, London's open London's open tends to create the low or high of the day. Of the week. So as an example, Wednesday, right? London open, this is the low. 2 a.m. it begins, it's 2:45, opens, creates a low, goes aggressively higher, right? We have that day there. Then we have, as an example, Tuesday. Tuesday, well, actually it's created through, as you can see, Asian session, this is the high of the week. And then Tuesday through London does create a high, then of course is respected through the entire rest of the week. Here we have the low of the week being created through Wednesday. Actually, no, it's not the low of the week. The high of the week is, well, actually, no, it's not created through high to Tuesday. But Tuesday does create a pretty big high, then is respected through the entire rest of the week. Wednesday, Tuesday, between Tuesday and Wednesday, so Tuesday's New York creates the low of the week and then continues trending higher. So I want you to look into your weeks. As an example, here Wednesday creates a high of the week, goes lower. This is something that I want you. Tuesdays, London Open creates a high of the week, low of the week. Sorry. This is something that I want you to look into your charts and just keep in mind. Right? There's the stuff that ICT teaches that could be used entirely to create a new strategy or to trade just based on that. As an example, I could wake up on London's open on Tuesday and Wednesday and say, if we're expecting the week to be bullish or to be bearish, I'm going to look for confluences for that low or high to be created, set a trade with a large stop loss, and just try to hold the entire week to get the entire week's range. That could be a strategy just based on what ICT teaches, right? Of course, that's something that I'm not really interested on. I like trading short term. I like taking trades every single day. Thing is that ICT's strategy, or the way that I'm applying that those concepts, getting opportunities twice, 3 times maybe a week, and I'm pretty happy about that, right? So just wanted to mention that. I do believe it's worth rewatching old content, Market Maker series, Sniper series, and all that. So yeah, that's pretty much it. I don't want to ramble too much. So I hope you enjoyed this video. Hope this was worth your time, and I'll be talking to you on to the next one.